happens when a currency collapses. Now, for people living in the United States, it's very difficult to comprehend what happens when your currency devalues 20% overnight. For people living in South Africa, Argentina, and I mean, even places like Europe now, where you look at what's happened to the European currency, it's obviously not as aggressive. We understand that you need something that's transportable, yes, and somewhere that you can get your money out in and out of very, very quickly. Specifically, if you have to leave where you're at. So, I mean, one thing we've seen with Russia, Ukraine is that a lot of the Ukrainians had to leave. So if you own property, if you own gold, if you own silver, you can't leave. You can't take that with you. And I think that's a big thing.
Let me suggest a different reason to start going long Bitcoin, which has nothing to do with foreign currencies, but a lot to do with policy in the United States. There's two bills floating around, but let's talk about the one that has the chance of actually getting passed in the U.S. after November 8th, which is the midterm elections. It almost went to markup last week. It's called the StableCoinTransparency Act. Now, this has nothing to do with Bitcoin, but it has a lot to do with the tone of regulation. And the reason I think it's interesting is they're trying to solve for the challenges that occurred in these collapses of stablecoins that were built around algorithms. 62 billion got erased. The regulators got upset about that, although the majority of that capital, because it was decentralized, was in other countries. But this act is very simple in nature, which is why it may pass. It's being supported by both parties, and the reason that's the case is that it makes effectively the US dollar the default payment system worldwide, which everybody can get behind. So if you have USDC or any other stablecoin that's backed by the dollar, and the test to get it regulated is very simple. You're going to get audited every 30 days. It has to be backed up 1-to-1 with a dollar or a treasury bill. All the treasury bills backing the coin or the token have to have a duration of less than 12 months. And if you're willing to go through that scrutiny, they'll issue you a license. Now, if that were to happen, and it may happen very quickly after November 8th if the House flips, and that's the anticipation is House flips, nobody knows what's going to happen in the Senate, that's a coin toss. But even though it has nothing to do with Bitcoin, that'll be the first regulation passed by US regulators. And I would argue you want to be long Bitcoin going into that outcome. So if you own stable coins, you're going to see a lot of interest in institutional capital coming into, let's say, USDC and Circle. Circle, by the way, took in $200 million from Fidelity and $200 million from BlackRock a few weeks ago in a Series F at a $9 billion valuation. They got $54 billion of coin. So, end of the day, regulation comes, Bitcoin goes up, and I agree with your thesis that it's a good asset to have if you're in a country where your currency is collapsing. But if institutions smell policy, then you've got a real move up, and that's when you break out of this $19,000 to $22,000 trading range against the US dollar. I think it goes right through that very quickly.
Jamie Dimon has been anti-Bitcoin for a long time. He was anti-Bitcoin in 2017. He's still as much anti-Bitcoin today, 5 years later. At the same time, his bank is recommending Bitcoin, making it available, having custody for their clients in Bitcoin. Why do you think Jamie Dimon has such a negative stance on crypto?
You know, his stock, along with other bank stocks last week, hit new 52-week lows. Part of that challenge is this concept of the StableCoin Act being passed, and that specifically hurts him on ACH transfers and wire transfer fees, which are very high between banks, particularly across economic geographies. So if you're transferring from US dollar to Swiss franc through an ACH, you're going to pay a lot of fees, and you're going to pay a lot on the SWIFT transfer as well. And those banks make millions of dollars each quarter off those fees. If all of a sudden you were allowed to use a stable coin at a fraction of that cost, and both regulators allowed for that transfer, that would really hurt profits in banks, not just JP Morgan. And so you're seeing a lot of that issue right now in the equity values. You would think as rates go up, these bank stocks would be moving north. No, they're hitting new 52-week lows. And part of this is the market trying to anticipate the disruption when it's going to happen. Here's a question for every investor to think about. There's a risk in investing in Bitcoin and all crypto. There's also a risk of not investing in it, because if it's true that it becomes the 12th sector of the S&P in the next decade, some of the value in financial services stocks like banks, like money center banks, are going to transfer to these new technologies, and you simply don't know when that's going to happen. So my thesis is you should have some crypto in your portfolio because you don't know when that's going to occur. And if you completely don't have exposure to it, you may miss participating in the growth of this 12th sector of the S&P, which would be a bad outcome for performance.
It's so cold outside, I'm alone.